Everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at the cannabis sector. So this is the marijuana sector. We got the nice bounce today that we were looking for. The Toronto Stock Exchange was up yesterday, so there was a huge bounce yesterday for the Canadian stocks. Now today the over-the-counter Canadian traded stocks followed suit, and so you had Canopy growth up almost 13% today. So it was a really nice bounce. RSI and Fasto are still in the bull zone. As you can see here, it came down and hit near that middle Bollinger Band support level down at 24 and held support. It held this EMA 13 here, and then today it closed back above EMAs 4 and 8. So currently the key level to stay above is 29. If it can stay above 29, then we'll be looking for a run back up here to test that 34 zone high close. If it fails to get above 29, that could signal some consolidation, and you could see the candles work back towards that middle Bollinger Band at 24. Let's take a look at ACBFF. This is Aurora Cannabis. So yeah, it had a really nice bounce today on that open. The problem is that many of these Canadian stocks had gap up opens today, and so all the money was made for anybody that was holding from Friday. A lot of them were difficult to trade intraday because they formed black candles like ACBFF here. So you notice that the close on Friday was down here where it tested the middle Bollinger Band and held, and the open was way up here. Notice that the open was at 980, and then the close was at 962. So it closed right near the open. It ran up higher, ran down lower, but it finished the day pretty much near where it started. So the only people that made money were people that were in and loaded on Friday. Unfortunately we were afraid this was going to happen. We were also looking out for black candles that formed today for ACBFF as well, and many of the other tickers in the sector. That was a signal that the bears attacked that gap up open. It did close above EMAs 4, 8, and 13. So right now, that 955, or actually 958, because EMA 8 is above. So basically, if it can stay above 960, hold this 960 support level, that signals more upside potential. And then we're looking for a run up here to this 1150 zone. If it drops down below that 919 level, EMA 13, that's going to put the middle Bollinger Band at 814 back on deck. It has to hold the middle Bollinger Band to keep the uptrend going. If you look at the ACBFF 15-minute chart, you'll see the key level that it needs to break, or actually the 4 key levels. First off, you could see in the morning it ran up and it hit the red line up here, which is the 200 simple moving average. Currently at 1032, and that was the high of day on this candle here at 945. And so that the red candle following, this was the climax spike. It all happened early in the day, and then it got faded after that. So notice that the 100 simple moving average, the gold line, broke here at 1130. That signaled more downside risk. And then you had the 300 simple moving average break. It did come down and hold the 50 and the 20 simple moving averages, but notice how the 20 turned into resistance into the close. So basically, to make a long story short, it has to get above the 100, the middle Bollinger Band, which is the 20 simple moving average, the 300 and the 200 simple moving averages on the 15-minute chart to break out higher. Now if it fails to get above 1032, which is the top moving average, that's going to signal more consolidation. If you see it struggling with 970 tomorrow, that's going to be a red flag. That had been the big resistance level. If it breaks above 970, that's going to signal that it's still in play. If 970 is resistance, you're likely to see 920 tested. That's the 50 simple moving average. A drop below 920 would signal downside risk, putting the 8s on deck. Okay, let's look at MEDFF. Okay, yeah, so this closed up 4% today. It does have RSI here at 56. It bounced and it's still in the bull zone. You want to see Fasto get above 50. There was a bullish crossover here on ADX with plus DI crossing back over minus DI, the green line above the red line. And so this is the black candles that I'm talking about. Notice the black candle here. The open was up here at the top of the candle, okay, at the top of the real candle body. And then the close was below the open. It closed above, it was up on the day because this is the close on Friday down here at 18, but it was closed below the open. That's a signal that even though it was up, the bears were actually, attacking. It did bounce off of low of day, so the bulls were able to run it up off of the middle Bollinger Band. So once again, that was the low level. It needs to hold 1735. That's the key level. If it breaks below 1735, you're going to see the 50 simple moving average at 1442 on deck. To the upside, it has to get above 962. A close above the EMA 8 at 962 would be bullish, signaling more upside potential. Okay, let's look at APHQF. This was the huge winner yesterday on the Toronto Stock Exchange, and it had the giant gap up open today. It closed at 1885, or opened at 1885, way up here. It actually opened above the all-time high close, which was here on the 9th. Just happened last week, but it pulled back below that level. It needs to close above the closing price on the 9th to head higher. If it fails to get above 1850, that's going to signal consolidation. The red flag is there is a gap on the chart between these two candles. It looks like the gap between those two filled. So basically, what happens is the gap below is the target for a refill if support fails to hold here. And so you could see a drop down to 1550, down to EMA 13. That would fill the gap below. So keep an eye on that level. You could get a technical bounce off of 1550. It has to hold the middle Bollinger Band here, down here at 1454. If that breaks, that's going to be a major red flag for all of these marijuana sector stocks. If the middle Bollinger Band turns into resistance, the chart is busted and it signals a possible start of a new downtrend, and the bears are in control. It did close today above EMA's 4, 8, and 13, so it has to stay above 1661. If you see it drop below 1661, that's going to be a red flag. Now look at the APHQF 15-minute chart. You can see here it's above the moving averages right now, except for the middle Bollinger Band. As you can see down here, you've got the 50, 300, 200, and 100 simple moving averages all lined up in the 16s here, and then the share prices. You have EMA's 4, 8, and 13 all converged in the 17s here at the 1740 level, and then just above it is the middle Bollinger Band at 1750. So if it can get above 1750, that's going to signal that it's still in play. If 1750 turns into resistance tomorrow, that could signal some consolidation, and you could see these moving averages below tested. If it drops below the lowest moving average, which is the 50 simple moving average at 1619, that would be a major red flag that the chart is broken and that you could see more consolidation and a pullback. Now to the upside, what you want to see is a close above high close horizontal resistance, which would be the closing price in the first candle of the day, which is up here near 1875. It needs to close above 1875 to head higher. Okay, look at IVITF. This was a big winner yesterday on the Toronto Stock Exchange. It was one of the top gainers. It did close up 19% today. Notice it had the indecision candle. Unfortunately, it was all baked in at the open. Even though these are over-the-counter stocks and there's not supposed to be pre-market trading, they do have some pre-market trading that very, very, very light, and it all got baked in. I mean, this closed way down here. This looked like it was going to be a good setup to be able to enter this morning around 150 or so. If you could get in the 140s, that would have been great. But it gapped up open way up here, and it didn't give anybody a chance to make any money. And if you chased and ran up here, you were underwater. So it just pretty much, like a lot of these Canadian plays, we were thinking they were going to be good traders today, but they just turned out, most of them, to be bull traps. And so so we need a clear picture here. It could keep. The bottom line is there's a gap here between the two candles, and if it dropped down to 160, down to the bottom of this gap is the top of the gap. Okay, the bottom of this candle. So 170 is the top of the gap, and 160 is the bottom. And so if it drops down to 160 and tests this EMA 8, it could fill that gap, and you could see a technical bounce off that level. It has to hold 140. If 140 breaks, the chart is busted. Keep an eye on it, though. It had good volume, and it could keep going. Now we're going to change gears. The previous stocks that I showed you were all Canadian companies. Now I'm going to show you some American U.S. sector stocks. And first up is Kush Bottles. This has been on one epic run, KSHB. When it was down there at in dollars, down in the dollar range back in October, nobody wanted it. We had been talking about it. It was below $2, and then it heated up, and then now look at it. It hit 850 today. I mean, this has been one heck of a run. Unfortunately, not unfortunately, but a bearish pattern did form today, and so that is a red flag that the chart is getting frothy. Notice there were 3 gap opens in a row that formed bearish 3 gap ups reversal pattern. So it's just a signal that, yeah, the chart's getting ahead of itself and to be ready for a possible cool down. Notice today's candle did push well above that upper Bollinger Band. If the candles do work back into the bands, EMA4 at 671 is the key level to hold. Notice it's been holding, for the last several days since the middle Bollinger Band was tested back here. Once you get a close below EMA4, that's when you're going to see some consolidation. You have to watch out now for that climax spike, because look at the big volume bar today. Multiple day run, big volume bar, push above the upper Bollinger Band. You could see a little pause here before the next push higher. The KSHB was bucking the trend today. It had huge money flow. I mean, there was 2.5 million shares plus traded today at $8 a share. That's big money flow for the OTC. So yeah, if you look at the weekly chart here for KSHB, you'll see what's happening. It's on this big run. As you can see back down here, it was trading between $1.75 and $2 through August and October, and then it really got going when it got above the 50-week moving average here in November. And then this close here right above resistance on the start of January. Okay, so it closed right at the key level, the October high close from 2016, and then that big move last week signaled that it wanted to head higher. Now this week you have another push. Notice this week's candle is floating above the upper Bollinger Band and EMA4 at 623. You could see those candles work back in the bands. It is getting frothy. Now you can see the next target. It's the all-time high at $10. So once $10 is hit, that could be the climax. That's the all-time high. Once it gets above 10, there's no more resistance. Look at the volume when it hit $10 back here. Hardly any volume at all. There's barely any resistance up here from previous trading, because there's hardly any trading at these levels. This is technically going on a blue sky breakout. Once it hits that 10, it'll be blue skies. The question is, can it continue this super strong uptrend with this very high valuation now that it's up here near $8-10? We will see. This is Kush Bottles. They make the containers that people put their marijuana in. So yeah, let's look at GBLX here. So this had a nice bounce, closed up 16% today. Notice it bounced off the middle Bollinger Band. So that was the move that everybody's looking for. There's a lot of charts like this. And so what you want to see when they pull back is just that this middle Bollinger Band holds currently at 87. As long as that level holds, the uptrend's intact. It has to get above EMA's 4 and 8. So basically $1. The dollar is the level. So above $1 signals more upside, and then we'll be looking for potential run up to this prior high close around 130 will be the run. So above $1, we're looking for a run up to 130. If it fails to break above $1, then you're going to see the middle Bollinger Band tested. If it drops below 87, that's going to signal downside risk. You could see it drop down to the 50s and test that 50-day simple moving average. Another bounce play, it was all across the United States marijuana sector. If you caught my video, the last video, I was showing how the Congress had passed that bill to try to save the marijuana industry, and so that created a sector-wide bounce. So the whole sector's in play. The key now, okay, so we had the bullish moves today. The key now is follow through. Are they going to follow through tomorrow, or are we going to get red candles? It's going to be a huge signal across the sector. Was this bounce for real, or was this just a technical bounce off of support on stocks that are already breaking down? Because as you could see here, this was already had 4 red candles in a row. And if you caught that last video, I was saying it was like do or die. They have to bounce off this middle Bollinger Band, or else it's going to be broken syndrome. They're going to break down and have possible downtrends. And so that Congress bill that was passed, that's super is saving the day here. And so it has to so basically are people going to jump back into these marijuana stocks and start buying, or was this just a one-day event? So that's the point I'm making, and we'll find out tomorrow, and we'll find out whether or not EMA's 4, 8, and 13 on these charts turn into support. Notice they all closed right above or right below, right near those levels. And so on this chart, it's $2. If it can stay above $2, CNBX is still in play, and then we're looking for a run back up to 270, up to that recent high close. If $2 fails to break, you're going to likely see 169 tested, pull back to that middle Bollinger Band, and if middle Bollinger Band breaks, then you're going to see a big drop to test these simple moving averages below. So it's a crucial level on the charts. CNBX did form bullish one white soldier reversal pattern today, so that is a nice reversal pattern. You can see the white candle here. The open today was above Friday's close, and the close today was above Friday's open. and so that creates the bullish one white soldier reversal pattern, which is a nice reversal pattern. Many times you get follow through when this pattern forms. We'll just have to see. Okay, let's look at CGRW, closed up 26% today. This is a thinly traded stock, but look at the bullishness of this candle. This is a full Marubozu candle. Notice how there's no lower wick and no upper wick. The first trade of the day was low of day, and the last trade of the day was high of day. It doesn't get any more bullish than this candle. This is a signal that for the entire day, the bulls were in control. It did close back above that middle Bollinger Band. It looks like bullish engulfing reversal pattern formed. It closed above EMA's 4, 8, and 13. As long as 174 holds the middle Bollinger Band, it's in play, and it could run back up to 250 up here. If you see it drop below 174, that's going to signal a consolidation. It could get a new downtrend going. Notice it bounced right off of that 300-day simple moving average down at 130. That is the downside risk. If 174 fails to turn into support, you could see it pull back to that 130 level. Okay, let's look at POTN. Okay, this was another nice bounce today. Notice how it bounced right off of that orange line. That's the EMA 13. So it's holding this uptrend. It's formed, you know, this kind of sideways channel these last several candles, and so what we're looking for is a break above high close resistance, which is right here at basically 26 cents. And so we're looking for a run up to 26. If it can close up above 26, that's going to signal it wants to head higher. If 26 turns into resistance, that's going to signal more consolidation. Now the big level to hold is 19. If it closes below 19, you know, drops below, that's going to signal a red flag. It needs to hold the EMA 13. If that breaks, you can see a drop down to the middle Bollinger Band. I don't have the Bollinger Bands on this chart because they really throw it off and make it difficult to read. And then one last one to leave you with is CBCA. You know, if you look at the news over here on the right, they teamed up with CBIS, which is a marijuana sector stock, and they're getting into the cryptocurrency game. And as you can see here, you know, it had already made a nice move. It's very thinly traded stock, and then you know, it heated up last week, the last 2 weeks, with this volume spike on the 3rd, and then today it had another volume spike and another push higher. Yeah, so keep an eye on it. This is, you know, up here you've got basically, what is it, 750 is the next big resistance level to break, and so if you see it break above 750, it could possibly keep running higher. Be careful though, these thinly traded stocks can be easy to buy, but once the volume dries up, they can be tough to sell. And then if you look up here, the all-time high, a close is just above. So this is kind of interesting. You know, if it can, it looks like it's working its way to 750. And then, you know, you can see the upper wick hit that level. And if it can get above 750, it could possibly run to 12. Either one of those levels it could top out at. This 750 is going to be huge. It was a prior double top level. So you could possibly see some consolidation when that level is hit. Okay, thank you very much for viewing this video. If you'd like to learn more about charts and if you'd like to learn more about charts and technical analysis, check out our chat, check out our stock app. I'll post the link below the YouTube video. Okay, thank you.